Hello, and a massive hello to everybody. How's everybody doing? I hope everybody's having a great day. Here we go. 50 pips rocking and rolling, 29th of May, 2017. Let's do this. So what's going on this week? So, big question is going to be, at least on the equity side, is are we going to continue to ramp all the way into the end of the month before we have a chance of any kind of correction? We've got some decent data points this week. Should be fairly interesting, and it's ending with non-farm payrolls, right? So that's pretty much what we got on deck in terms of the data calendar. Now, as we've been talking, we've got volatility waving its hands in the air like it just don't care. Nothing much going on. We've discussed on the blog a lot, Bitcoin wheeling and dealing last week, the parabolic roll, and then, about off 30% off those highs with potential short-term Bilzerian top. We'll have to wait and see. I think everybody and their pet hamsters talking about Bitcoin, so I'm going to refrain at least. And again, in terms of the race to 1,000, right? Amazon and Google, who's going to get there first? It looks like Amazon's going to try and do it. How poetic would it be if we need to get these rip through that 1,000 to get a correction on NASDAQ, right? Get a move back, pop back up, and then a close back below. I think a lot of people will be looking to try and get short if that happens. If you look at something like NASDAQ, a lot of people are going to be very, very frustrated, and a lot of people are going to be trying to get aggressive here. Really, the way these things tend to work is, if you're going to try and stay stubbornly short something, even in terms of the equity indexes, you probably want to stay with a weaker one, not the stronger one, because that's just a lot of pain waiting to happen. And now, it doesn't mean, of course, a lot of people are going to say, oh, but the NASDAQ can correct a lot more. It's got a lot more room to run because the move is a little bit silly. The correction is going to be the one you want to be part of. But what we would say is there'll be plenty of time, if there's a bigger move, to get on it once you start to see the exhaustion, once you start to see it roll over. There's no point trying to step in front of this, because you're just going to make things much harder than they should be, right? But in terms of NASDAQ, what we'd be looking at, again, do we get some kind of exhaustion, some kind of, close weekly, close daily closes with a long wick to the upside? But especially a lot more interested to see, what happens in terms of on Amazon. And Google around that 1,000, because that could be a little tell. So that's something which we think is going to be very interesting to keep an eye out. Again, in terms of the equities, of the indices, what we think is the most interesting one is IWM. So it's the Russell, right? Let's see, let's get the run up. And let's see how this behaves. But this has been extremely interesting, and we felt there were a lot of risk reward to try and play the short side on this. You can see it's hovering right here, but again, it's struggling. So again, we get some traction here back below these two moving averages. Our call is unchanged. We still think you've got some kind of a broadening top here, megaphone pattern, whatever you want to call it. But again, we think this is in play. It's being a bit choppy, but as long as that doesn't get taken out, we expect to see closes back below those two moving averages and attempt to take out those lows. What else is interesting? DXY. A lot of people are going to be looking at DXY here. Again, the big question is, are we going to get a correction or not? We still think this is in sell rallies mode. We clearly would not be wanting to chase it here. The level to focus on is this breakdown zone around the 98.50s, right? Any move back into here or even higher is still a healthy correction in the context of this bigger move down, right? For ultimately trying to come back into the 95.80. So we'll have to see how this behaves, and a lot will depend on how aggressive the moves are on the equity side. But there's very little to, no matter how bearish you are here, it's a tricky sell, right? So I think here both the bears and the bulls are going to be looking for a bit more upside. It can surprise, structurally we still think this move has some more to go to the downside, but right here it looks like the risk is stacked for a little pop. But as always, be careful when everybody agrees on what to look for. We think that the yen is also particularly interesting because if you remember from this false break back above, our view was that as soon as we're closing back below this 100, right, and especially back into this descending channel, this was in play for a continuation back down. I think a lot of people don't agree with this, and we can see a case for the move higher, but right now we're going to maintain the same kind of view as we have on IWM. As long as this doesn't get taken out, as long as price doesn't recover back above here, we expect this to try and come back down, or at least into this 200 DMA. Another chart which we've been talking about a lot is cable or GPB in general, and we've been talking about what we say reality bites a little bit more, reality back on sterling, and we're bearish sterling. So right here, very, very nice action. I think sometimes the market is clearly talking to you or trying to tell you something, and it's important to try and listen. And here this move was very, very interesting. We talked about the fact that the daily closes above or below the 130 were going to be key, right? And here on a 1 hour, it's fairly clear, right? We move back above, we get those aggressive sellers moving it back up. We move above, we got aggressive sellers. We try and go above, wicks, smackdown, closes below, wicks, smackdown, closes below, wicks, smackdown, closes below. So all these wicks to us offer extremely, even if you weren't on at the beginning of them, extremely nice risk reward for that move back down into the 128. Because if you remember at the beginning of the week, last Sunday, we said daily closes above 130, we expect 132 to print. Daily closes below the 130, we expect 128 to print, 200 pips either side. So again, very, very nice action last week. I don't think anybody can complain on the cable chart. And right now, what we'd be looking at again on the daily is if we can recover, right, or if any rally back again towards that 130 keeps on getting sold, and we end up closing below the 128, then our base case is that we're going much, much lower. We're going back into the mid-range of this choppy action. That's what we might get into the election. So right now, the way we're looking at it again is 128 being the pivotal level for the week. So we've actually shifted down from a 130 to a 120, right? Above 120, we could see 130s print. Below, then we'd expect to move back down. Actually, if you see this is in line with a 126. So I tell you what, let's be boring. Last week we said 130 for 132 or 128. And this week we're going to say 128 is pivotal for either 130, daily closes above or below, or 126. Let's keep it nice and simple, 200 pips to the upside, 200 pips to the downside. And our favorite way of looking at this, one of the bigger structural plays, have been on the longs on Euro GPB. We discussed this in detail. I think even in some of the live, I think it was in one of those free live sessions we do on Wednesday mornings that we thought the edge here was to get long. And again, this is in play as long as we hold back below here, back above here. We think that this is still bid. Below, you can get a little bit correction even to the 50 back of this move, but above, we think we've still got a lot more room to run to the upside. What else have we got that's interesting? Just trying to do a little bit for everybody. XLF, we think this is still fairly interesting short. We're going sideways. It's not moving that much. Let's see if TradingView is going to load this, or if it's not loading. Looks like it's stalled. Doesn't want to play ball. Let's try it this way. XLF. Okay, there it goes, loaded it. Right, so here We'll have to see what happens, but as long as these highs don't get taken out, we still think there's a bigger move to the downside coming in. Crude. That's why a lot of people are going to be asking about crude. We were talking about crude. We discussed this last week, and we said it just looked like this was going to be a buy the rumor and sell the news. We're still fairly bearish, right? So we were short from this failure for a move back into ultimately the 42.50s, right? We just got this puke through the 45s, this exhaustion with a positive close on the daily, so very difficult to get short into that. You'd expect to see some rally there. We thought that this was going to be contained for a move back into this trend line, might get a nice chance to sell this, and then we got that huge squeeze, right? So this is where we said this just looks like it's really buy the rumor, sell the news, and we got a very nice reaction post OPEC. So right here, we're still back in this choppy area. I think the bulls still have a case to make. We still prefer to side on the bearish camp. We still like the fact that we're having these series of lower highs and lower lows in place. So we'll have to see here. Again, unless we start to trade aggressively with daily closes back above these 52s, above this descending trend line with pressure into here, we still think the path of least resistance is to try and test these lows, as we might have some unfinished, unresolved business there. Okay. Gold, what's happening on gold? Not a little bit of a pause. Our base case hasn't changed here. We still think this was the front run of the 50 back, and we think this is still trying to coil back for a move above the 1300s. We'll have to see how it trades here. Again, the open's going to be tricky. You might see a lot of choppy action, but clearly daily closes below here. You could see a little bit of a correction and an attempt to come back down, but we still think this is a bit, again, seeing the way the markets are acting, you really have to ask yourself, if you're a bull with NASDAQ, all the tech stocks going sky high, bid, I think it would be a little bit unwise to not stop a second or a millisecond and ponder, why are bonds and why is gold so bid, right? And that should probably make you think twice about, trying to get uber aggressive at highs. So that's pretty much what we're looking at. Euro, what's going on Euro? Again, this hasn't really changed for us in terms of the bigger picture. Very unpopular call back in December for us, but basically we were looking for Euro to base in this basing process, and we looked at all these big TPs. We're looking for this to potentially move all the way back into the 120s, 122s. So as far as we're concerned, this move is completely and utterly in play. If we look at a different chart, just to look at a slightly different, so we don't have all those markings on the chart. If we look at this on the daily, would this be an interesting place for it to pause a little bit into this wick? Sure. Could the gap fill? Sure. But right now, the way these things are playing, even if you get that little correction, you'd still expect to see a lot of buyers coming into that 110 to try and continue to push it higher. Again, a little bit of a funky week here with a long weekend. We'll have to see how things come into play. We've got the month ends in the middle of the week. Then we have non-farm payrolls. I think it should be interesting, at least one can only hope. I hope this was useful, guys. Thank you so much for liking. Thank you so much for sharing. Thank you for all the kind comments as usual. Very, very much appreciated. And let's see what's going on. I might not do a Wednesday update on YouTube this week, since we've just done this pretty much. If it gets interesting, maybe we'll do on Thursday. Let's see what happens. Okay. Thank you so much, guys. Have an awesome one. Take care. Bye-bye.